if you had 10 million Ugandan shillings, would you put it on a fixed deposit, or it's better to invest it in a unit trust? I've ever answered this question, but just for this sake, I will answer it in the simplest way possible. Now, all of us, and by all of us I mean investors, what you're looking for is, if you put money somewhere, you want to get the best return possible. And when it comes to fixed deposits and unit trusts, it's good to understand that from the Ugandan context, there are factors that will determine how much you'll be paid. And the first factor will be the taxation. It's good to know currently the interest earned on a fixed deposit attracts a 15% withholding tax, while the interest earned on a unit trust, that is the interest that is distributed to unit trust holders, attracts 0 withholding tax. So already from the tax point of view, the person who has invested in a fixed deposit is worse off compared to the person who has invested in a unit trust. But also, when it comes to the interest that will be distributed, it's good to understand that when it comes to unit trusts, after they have deducted, when they make the profit, after the company deducts the management fee, which is between 1 to 2%, the rest of the money is distributed to unit trust holders. So at the end of the day, if you compare the percentages, a unit trust always distributes a better return compared to what is distributed from a fixed deposit. So in my view, you are far better off to invest in a unit trust. And the advantage with investing in a unit trust also is the fact that you can easily access that money. Because remember, when it comes to investing, the investing world is very interesting. Today, you might think this is the best investment available, but tomorrow, there's another better deal. There's another better investment. It might be as basic as you have found land that is going for so cheaply that if you bought it, highly likely, you can easily resell it at a better profit, or you can easily hold it for the future use. So if you have money in a fixed deposit, accessing it is very hard, because remember, you have signed it maybe for 2 years or 3 years. It's until those 3 years end that you can access your money. But if you want to access it before the 3 years, then obviously you'll be penalized, and that can be maybe you lose the interest or even some of the principal. But when it comes to unit trusts, most of them now, you earn interest on a daily basis. But if worst case, you earn interest on a monthly basis. But let me focus on those that pay interest on a daily basis. If you want to withdraw your money, they pay you the principal, inclusive of the interest you have earned, until the day when you're withdrawing the money. That's why for me, I always prefer unit trusts in this whole case, because it means if you want to access your money before the time you anticipated to access it, you can access it at 0 penalty. There is no penalty, but also they pay you the interest earned until that date when you are withdrawing that money. So all the way for me, I'm all in for interest, because it is giving a better return, but also the conditions attached to withdrawing your money are not there, because anytime you want it, you can access it between 1 to 3 working days. So in the event you want a better investment, you have gotten a chance to see a better investment, it's far easier to withdraw the money from your interest and go and invest it somewhere. But also, in the event of an emergency, unit trust money is easily accessible. 1 to 3 working days, you can easily access that money. But when it comes to fixed deposit, it's not so straightforward when it comes to accessing that money. So in this scenario, I would totally advise invest your money in a unit trust. But of course, investing in a unit trust doesn't mean that that's the end of your investment. If you want to grow your money, keep investing more money. Don't just invest the 10 million. After investing the initial 10 million, keep adding if you can on a monthly basis. But also keep looking for other opportunities that if you get another opportunity, you can better use the money in your interest. Then withdraw the money in your interest and go and put it in the other investment.